Good evening. Ira Epstein with your metal market wrap-up, and this wrap-up is for Tuesday, 20th of May, 2025, and here we are just after 6:30 p.m. Central Time. You'll notice getting a little bit of a rally here in the energies. Let me come over here. The gold market just got back over the 3,300 level. The dollar's back under 100. Dollar down, other markets starting to get bids as traders are getting nervous. If you take out that 9,800 level in the dollar, be careful. There could be another 8-10% in this market to the downside. In the morning, we're going to get the U.S. Mortgage Bankers Association numbers. Now, this comes out every week, so we'll see what these higher rates have basically been doing. The API petroleum stockpiles, well, you added in the oil stocks 2.5 million, but now we took out in the gas change, spring driving, everything's kicking in now, and in the distillates. That's part of the reason why the market is coming up. We'll get the EIA petroleum stock numbers at 9:30 a.m. in the morning. So as we look at this, I'll cover what the stock market's doing, if that's okay with you, in the financial market update. Why don't we just go right off the bat and take a look at where gold is? When you look at a weekly chart, you certainly have lower highs, lower lows on the market. When we come to the June daily bar, you can see how the market is swinging back up here. I looked today to see, was it time to go to the August contract? It's not quite yet, so we'll stay with the June at this point. Let's take a look at what the swing line did, because it broke the downtrend. And it's not about what the market did up until, let me walk you to this. If you take a look at the high right here, it's 3255.80, and this high was from Friday. Now, if we go back on that all the way to right here till Tuesday, you can see the high there was 3270.40. So now I'm going to bring you back where the market's doing this. Here you come, and this was Friday. Here's Monday. Inside day. Now, if you take out this high here, even 3255, what do you have? It's not 3270 anymore. It'd be 3255. You get yourself higher lows, higher highs. You're certainly out of the downtrend. So this phase of the market is over, and instantly, just like that, it kicked into a friendly bullish phase. And where the market went is it stopped right at what I call the line in the sand, the 18-day average of closes, and it's hanging there tonight. Now the market is trying to figure out, okay, we had a bear market rally into the 18-day average. If the market can stay over the 3285.70 level, it should start attracting some buying. The dilemma for the average trader is, what are you going to do? Buy it here with the stop under 3207.40? That's one heck of a risk. I wish you the best with that. I don't think the pro traders will do that. You can see I left these arrows here to just show you, but higher lows, higher highs. Look how the Bollinger Band actually held the market really neatly. And as we came back here in momentum, you had gotten oversold, you corrected it. And if, tonight going home, I'm saying trend up, bias up, dollar risk too large to take on. When I look at the gold-silver ratio, as long as the number stays first under the red line, the 18-day average of closes, it means you need less ounces of silver to get an ounce of gold. So on a relative basis, that's all it is, silver's acting stronger than gold. When we come over to the silver chart, you've got higher lows, higher highs. In looking back, I think you'd agree with me, the gray line here that I'm pointing at, the 200-day average of closes, that held the market along with the black dash line, which is the Bollinger Band. The market fought, and I can come back here for you and show it to you. The market fought, as you can see, between those for almost 2 weeks. Now what the market has finally decided to do is say, okay, trend up, market is overbought, but it might want to reach all the way up to 33.32.5, which is the upper Bollinger Band. Support, I would look at it now, 32.75.5 to 32.82.5. In looking at the copper, still bearish. Lower, under the 18 day average. Momentum gradually came up. The battleground has been for 2 weeks between the green line, the 100-day average, and the 18. If the market can get itself and close over 470, 370, you might get a shot at lifting to wherever the Bollinger Band is. The strongest of all the markets is the platinum. And look at what it did today. I mean, this market went on fire, $50 higher. That's a big move. Came out of this sideways action, and look where the market held. Each day, if you go back and look at the videos, I was saying, you're doing a great job of holding the 200, the 100, and the 18-day average. It wasn't trying to break out, but when you narrow in like that, think of this as energy in the market. The more it spins around like that in a tight band, when it breaks out, it could be a son of a gun, and that's just what this market, in fact, did. And you're even following through tonight another $11. So you get a group of people here, the shorts, and they go, uh-oh, I'm wrong in the market, and away you go with that. What is kicking a lot of this off in part is what the dollar index is doing. Now, it's nowhere near the low that it had before. But this rally ended. You and I had talked about that in these videos. I thought the market might make a run back to the 18-day average to try to figure out what it wants to be when it grows up. And that's right where you're at, just like your kid. All right, what do you want to do? Closes under the 18-day average of 100.01 will be on the bear side. Where did the market close? 99.977. So going home, you have lower highs, lower lows. The market's in a bearish bias because it's under the 18-week average, 18-day rather, average of closes, and momentum pointing down. I think it's going to battle here for a while, but if it were to just let go, then the next objective is 98.47. That's quite a ways down, but 140 points from here, 150 points from here, but that could be where the market wants to head. I've been covering why this is happening in my updates. So if you get and you go to our free offers, one of them that you could get is trial to my Spider ETF videos, my futures videos, all the different things that I write about, but then you get my market research. And I put out 2 papers a day minimum, and that's Monday through Thursday, Friday a morning update, on the weekend, a weekend update, and then I start again. I could also put out special reports. As you know, I'm looking now to do another one. You know, the natural gas report is over. It went off the website last night at midnight. And this rally that it's trying to get going fits in exactly with what I'm looking for. Ultimately, I'm trying to be bearish the market. Don't have a reason to do so yet, but I'm looking for the chart setup. See why, see how that all works. Try our different courses. How do you get this? Go to iraepstein.com, free offers. It's there. You can always call my staff. And if you're watching me on YouTube, you know you got that little circle with the eye in it. Click it. You'll see the link. Go right there. I'm Ira. Have yourself a great evening. I'll catch up with you tomorrow.